Welcome to session. Today we discussed about the cost and management accounting. In that topic we discussed about the cost sheet. Why we are preparing the cost sheet? Every company definitely prepare the cost sheet because cost sheet only shows that what are all the opening stock of raw materials and purchase closing stock and what are the expenses, all these things included. So we discussed about the cost sheet, what are the points included in the cost sheet. For example, we are preparing the X company cost sheet of 2024 means what are the items are included means first we frame the particulars and then amount, then total amount. First we prepare about the opening stock of the raw material. X, the manufacturing company, the purchase definitely they are raw materials. So we calculate the opening stock of raw materials. After that year we are purchasing the particular raw materials means we add the purchase of raw materials, then add the purchase relating to expenses only. After that we are list the closing stock of raw materials, then only we calculate the correct cost price of the particular one. So we definitely be opening stock of raw material and then add the purchase of raw material and add purchase expenses and less closing stock of raw materials. After that raw materials consumed we find that, then all the direct expenses, that is direct wages and direct charges are included. These all are expenses included is called as prime cost. After that we find out the add the factory overheads. What are all the factory overheads included means factory rent, that is the rent of the particular factory, then factory power, that is the electricity power we are used in the particular production factory power, then indirect material, direct material used in the prime cost but indirect material are used in the work cost, then indirect wages, that is the supervisor salary, all these things are included in that point. Then drawings office salary, factory insurance included in the work cost, then factory asset depreciation. These are all the expenses added in the work cost. First we calculate about the prime cost. After that we are adding factory overheads. What are the factory overheads? Factory rent, factory power, indirect material, indirect wages, drawing office salary, factory insurance, then factory asset depreciation. These are all the points included added is called as work cost. Okay, first we find out the prime cost, then work cost, then we add the administrative overheads. What are all the administrative overheads? Office rent, that is the administration related to we are spending the particular expenses, so that administrative overheads in that point we concluded that office rent, then and also asset depreciation. Asset depreciation included maybe fixed asset, current asset, these are all the points included asset depreciation. Then general charges, any other general charges included mean it is the included in the administrative overheads. Then auditor fees included in the administrative overheads. Then bank charges, because we are transaction through the bank mode, definitely the bank charges are applicable, that is added in the administrative overheads. Then counting house salary, it is related to the employees, the company giving a related to particular amount, it is a counting house salary. Then other office expenses other than that office rent, asset depreciation, general charges, audit fees, bank charges, counting house salary, other office expenses is included in that. These are all the items added in the cost of production. After that, we find out the less opening stock of finished goods. There is a add the opening stock of finished goods less the closing stock of finished goods. So we find out the cost of goods sold. Then after that we add selling and distribution. Definitely manufacturing companies spending a selling and distribution overheads. What are the selling and distribution overheads? Salesman commission, salesman salary, traveling expenses, advertisement of the particular product company, delivery man expenses, then sales tax, and also important bad debts. These are all included in the selling and distribution. So we are adding, we find out the cost of sales. So after that cost of sales, we find a particular amount, then we calculate the sales amount. From the sales amount we less the cost of sales, means we are getting the profit. That is the balancing figure is called cost of sales. And sales in between the amount, suppose sales high amount means it is a profit, compared to cost of sales, the sales amount is low means it is a loss. We concluded that. Thank you all. Now you are very clear about the cost sheet. Thank you.